Hello, so this is Buhle. This is Buhle Mpila, the greatest. So we'll be looking at the USDJPY on a monthly time frame. This is the long-term investment. It is something that you need to hold for years because it's monthly. These candles form in months, so you must be prepared to hold these pairs, this trade for years, not just the small trades. Right. So first off, I'd like to look at my supply and demand zones before I go to my support and resistances. Here, I can spot that this was a strong rejection here. So I'd identify that as my demand zone because from this area, the market was coming down, and then from this area, it went straight up. Where it turned, it gave us another strong supply. So identifying that area, I recognize that as my supply around that area. All right, let me just drag it a bit towards here. Yeah. And let me drag this one too a little bit. Right. So I have my supply, I have my demand, and the market is ranging around this. But ranging around this, what is it giving you? It's giving you lower highs and lower lows. So you can connect those. Once you've identified them, you can connect them. And once you've connected them, you know you have trend lines. So this is a bearish trend going down this way. You see, the market was trending around around this area, went here, went there, and there, and then when it happened here, what happened here when it hit this see what happened here is most identical to what happened here. I want you to see something here. It's not something that any other trader would probably show you. Look at what happened here. And then when you look at that, this is what I call something like karma, when something that happened before happens again. So when you look at what happened here, it's most identical to what happened here. This rejection happened again around this area. May not be exactly the same length, but it happened the similar way. It's a similar structure. When you look at this, this was a strong pulls towards that resistance, towards that support, towards that supply, and then from here as well, from this demand towards that supply, it gave us a strong bullish move. So what you know is after a strong bullish move or a strong bearish move, the market has to give us something like a consolidation, which is normally a flag or any form of showing that it's giving a rest or it's taking a rest from its strong move, from its from its strong move. So we are looking at this from here to there. That is the breakout of the trend line. At this area, the market broke out our trend line. I just want to show you this. Right, at this area, the market broke out our trend line right here. The trend line got broken out. What happens now when the trend line gets broken out? When the trend line gets broken out, you look at what my students will tell you that you look at what the trend line, what trend got broken. The trend line that got broken, what is it? Is it a bearish trend, or is it a bullish trend, or is it the sideways? So once you've identified that, and then you identify the direction from which it is broken, and then you can know what is the next move to expect, or what is the next dominant direction the market is going to take. The more momentum sits on the market. So when you're looking here, the market broke the bearish trend line with the strong bullish move. So from here, it went straight up, and then from there, it came back down. Now we need to identify. We would have expected it to give us a retracement somewhere around here after it did the breakout, but it went straight up towards that area. Why did it turn at that area? When you try to look, that area is around the same area as that turn there. You see, when that happened, it gave a strong supply. So it gave us strong sellers. It allowed sellers in towards that towards this demand area. Same thing here. It gave us strong sellers towards this area. So when you're trying to look, you need to find these areas where the market turns. And then you draw your lines of resistance or support. So that would be my resistance because that's where the market turned and that's where the sellers took over. But if it was below, it would have been my supply, like this area around here. When you try to look here, here we had this touch, we had this touch, we had this touch, and this touch. So these touches all show me where the market, the buyers took over. So from here, the buyers took over towards that resistance. From here, the buyers took over towards that resistance. So all these areas, I'm expecting the market to turn up. If it doesn't, then it has to turn midway up, though. It has to go up. And then similar thing works as here as well. When you look here, the market touched. Let me get the other one. Market touched this place here and turned down. Again, did here. Again, it did here. It did here as well. And it did here. So these areas are quite strong areas where the market here it served as the resistance or as the supply for the sellers to flock in the market, and then from there the buyers took over and went up with it, right? So we have identified the work of the supply and demand. We have identified the work of the support and resistance, but we have identified that the trend has been broken out. This bearish trend has been broken out and then retested here. It got retested. So we would have entered here with strong buys and ridden up nicely with this market going up that way, right? And then from there, we need to identify when the trend gets broken. We know that the trend that got invalidated or broken, it needs to be retested, and then the market has to go the opposite direction of the trend that it broke. Example, as we are speaking, this is a bearish trend and it got invalidated or it got broken out and retested. So now we're expecting what? The market to go the opposite way of this bearish trend. What is the opposite of bearish? Bullish, right? So we need to identify as well a trend or connect the areas where the market got rejected as a trend. So when you see here, we don't have really a clear wick here, so I wouldn't take chances and connect that. I'll rather connect where we have clear wicks. So in check here, we have a wick and a wick there. So we can connect those like that, right? Let me just remove that. We have a wick there and we have a wick there. So we can connect those like that. But we can't connect that because it's only one wick here. When trying to check clearly, we only have one wick. I wouldn't connect that. Some people have ways of connecting that, but personally, I wouldn't. So I have this line, which I can just expand to that, extend to that. And then I know now I'm expecting the market to play around this new trend, which is a bullish trend, right? Now, currently at what the market is doing, looking here, it's given me lower highs as well. So I need to be careful to not miss such things. I need to be able to identify those things and then apply the rules accordingly. So if you drag this line up there, you will see that that could be the pattern that it's forming. So it could have, it bounced there and went down and then went down. So it can get up here and come back down, or it can get up here and break that. Let me just show you. It could go up here, break that, go to that resistance. Remember, it broke a trend line, so it has to come back and retest it. Or you can do that, come back, retest that, and then go further up, right? Remember, it's still respecting this trend. Another person would see this as this. They'll say, okay, we have a trend line going down like this over here, right? Now let me remove the other line so that it doesn't confuse you. Let me remove those. Right, so we have a trend line going down like this, which got broken out now around here. And then we are expecting this market to go bullish again for a couple of months, going up towards that resistance, right? So that is something that we are expecting until July or June 2019. All right. So looking at that, what else can we identify? Because this is just purely trend lines or support and resistance, supply and demand. We need more confirmations for this. So when you're looking here, if this was a trend going down, we would have had a trend reversal pattern. But when you look here, this does resemble a head and shoulder pattern down here. So one would have identified that and would have traded it. So they would have entered somewhere down here and went up nicely with it. But we can still, if you have learned from your mentor, you can identify a pattern here, which is called a cup and a holder, which is one of my favorite patterns to trade. When you look here, this is our cup and a holder. It's a perfect cup and holder pattern forming here. And then this is our holder. And if this is our holder and that got broken, then we have more reasons to enter here our buy and head even expand or aim even more higher for our profits towards that area, right? So we can have that area as our take profits around, say, with that 144791. Let me change it to green. So that's our take profit, right? Our take profit is 144791. And then our entry could either be here where we are currently, or it could be just immediately after this trend line gets broken out somewhere around here at 127.831, depending on how you know how well you know the cup and holder and how well you trade it. But for me, I would have entered here at 127.831 and headed up towards that take profit above the at 144791. I would have entered there. That would have been my second entry, but my first entry would have been just here. When this red pin bar gets invalidated, then I'd enter. And then I'd enter, heading up with it. Heading up, hoping that it goes up that way. Now, when you see here how the patterns work hand in hand with the supply and demand and also the support and resistance. So with that being said, you would have to measure your target. According to the to this pattern called a cup and holder, your target should be the same as this base here. So if that is the base, and then your target should also be something like that. Yes, so from there, you should be aiming to get that high. Yo, and I can't even see it anymore, but it's up and up higher than that. So if that is that high, personally, I wouldn't expect it to go that high. I would just expect it to go to this previous supply, because that's the strong supply. So it can get there and then bounce back down. And if it does that as well, you need to take note. You need to be able to see what it's doing. So if it does that, it can come back down here, which would be wave 1, 2, 3, 4, and then it can go further up to give us wave 5 of the Elliott wave. right? So that is our analysis for the USDJPY long-term traders. You need to hold this bias going up with it. You can enter here, but you need to be able to be prepared to hold for the risks, because this thing is not joking. It is going up in a very strong way. And when you try to look here, this is like the a diagonal here, expanding diagonal. When you look at this, it's an expanding diagonal like that, or it's a channel, just a trending channel. Yeah, it looks like a diagonal. So going up that way, looks like it can actually still come back down, because if it goes up there, that's a nice supply. So it can hit there and then come back down here to retest and then take over there, going further up from there, right? You see what is happening here is similar to what is happening on the monthly time frame, because we have this bearish market which got broken out with a cap and holder, which now needs to retest and then go further up. Similar thing is happening on the monthly time frame. So that is my analysis for this pair. You can contact me if you want more information for the lessons.